Is Ethereum on its way to new all-time highs, or is there still a pretty significant chance for a breakdown and for Ethereum to be already, or maybe even still, in a bear market? We want to take a look at that today. I will tell you about the Elliott Wave structures, and we'll talk to you about the patterns that we see on the chart and how strong they actually are and how it compares to Bitcoin. Let's go. Yeah, hello and welcome to another MCO video. My name is Ben, and today we want to take a look at the Ethereum chart. I want to start by checking out the daily time frame, and I want to take you through the Ethereum Bitcoin chart as well. So I would say we'll start with the daily time frame. This is the scenario that you might already know, or the chart if you follow the videos regularly. The question is, is Ethereum still in an overall bullish structure? Is there still a chance for all-time highs? And a few weeks back, I made a video on Ethereum, and I think since then the market moved up a little bit higher, and that is very much in line with the larger time frame structure I'm tracking here on the Ethereum daily chart, which is currently still suggesting that a fourth wave, a larger degree correction indeed bottomed in June 22, and we're basically now in a fifth wave to the upside. Now, it is not a very easy structure to read, and you can ask 5 Elliott Wave analysts and they will give you different answers depending on their style of analysis, experience and everything. Again, it's not a high confidence pattern what we see here on the Ethereum chart. I mentioned that before. It's a bit of a problematic chart. The problem with this chart is that the rally that started to develop in 2022, it's only a 3-wave move up. We had a pullback, but it's very, very deep. So this wave 4 correction is very, very deep, deeper than it should be, not deeper than it can be. So it's too deep to be clearly a wave 4, but it's still valid. And in the absence of any other high probability scenarios, I'm rather looking for higher prices while being cautious. You could say I'm cautiously looking higher because it's a diagonal pattern. You can label it like that. It's absolutely valid. 1, 2, 3, 4, 5. And the wave 5 is an A, B, C structure. There might be even another layer of waves in between, but that is currently what we're tracking here. So that is the base case. And there is a support area. That means that basically a B-wave pullback is due at some point. This B-wave pullback should hold the area around $1,600. Doesn't mean we have to test that level. It just means we shouldn't break below. And it also doesn't mean we have to get that deep pullback. It's currently the key risk area. So Elliott Wave is a great risk management tool. It tells you what is currently within this scenario, the support area that could easily be tested. And that's for a B-wave, which I get based on the context, because I know, we cannot be moving up in an impulse. That's kind of, I don't want to say impossible, nothing is impossible, but considering that the wave 1 was a 3-wave move and the third wave, and we had this deep pullback, most likely we're moving up in a diagonal, which means that the move up is an ABC structure. So for a B wave, this is support, Now what we have to consider is that the initial A wave here is a 5-wave move, not a 3-wave move. That's what we're tracking on the smaller time frame. Looks even like a small triangle maybe that's unfolding here, So please consider that. On the micro level, things might still shift, but overall, I'm looking for higher prices. I'm leaning towards that bullish case as long as we're holding the $1,600 level. But I'm cautious. This chart can break and change at any point. So that's the idea currently on the daily time frame. Now, if it breaks below 1600, I have to consider that this here was something like an A wave down. This is a B wave up, and we break down in a C wave to complete this blue Y wave. And the wave 4 that presumably bottomed in June 22 never actually bottomed. It was just a local low. And the entire work the bulls have done after 2022 was just part of a large correction. Okay, I would say we now get a good understanding of what's happening here on the larger time frame. I want to take a look at the shorter time frame just for some clarifications, and then we'll take a look at the ETH BTC chart, because now that you know the ETH larger time frame chart, when we know the smaller time frame and the ETH BTC, then we know a lot about how it also relates to Bitcoin and what the effects could be if Bitcoin goes up further, which is also the expectation, right? And things to watch out for. But let's first take a look at the Ethereum short-term chart. So I wanted to take a moment here to talk a little bit about the structure that we're dealing with here on this Ethereum short-term chart. I mean, the focus here is not so much on what's actually happening from an analysis point of view. I want to share something around the education around Elliott Wave, right? An educational moment, let's say it like that. So what we see here on the Ethereum short-term chart is, in the white scenario, which is part of a larger correction, it's a very complex corrective pattern, okay? So these kind of patterns can generally be quite frustrating to people. If there is a lot of sideways action, there's no real follow through, and you see things that are then actually not being followed through, and it's a classical range, okay? So the market is just in a sideways range, in here you can see it's just been moving sideways without any clear sense of direction. A lot of people lose money in these ranges. Whenever we're in a range, typically it's best to prioritize risk management and capital preservation. But yeah, what I actually want to talk about here is not only the frustrations, but also things to watch out for and how such a complex correction can develop. Because, let's imagine price is moving up here, and then we see a three-wave move down, and that could have completed the correction, and then we're starting to look higher, but the market is actually breaking down again, and it's making these up and down movements, and it's getting very, very frustrating. So what we see here, what has developed in at least one of the scenarios, and you need to understand that in these corrections, in these sideways consolidation patterns, the wave count itself isn't so important. What is more important is, are we actually holding support? And the larger support area is down here, for example. Yeah? So it's about rather watching the range boundaries, key levels, and Fibonacci levels. The wave count itself will always change in a range. That's if there is no breakout success, yeah, then these corrections just extend. So what we have here, for example, is a pattern that formed a three-wave move down. Could have been a completed correction, but it actually never completed the correction because the rally afterwards ended as a three-wave move. Now, this could be some kind of a three-wave correction. What could it be? A wave W, for example, right? A wave W in a complex correction. The move up, three waves, can be an X wave, because an X wave is a connecting wave, three waves. And the move down seems like a five-wave move down. So it might be the A wave, that's a five-wave move, of the Y wave. So you know how a WXY structure is made up if you watched our tutorials. And this could be, for example, a B wave, and we could get a C wave down. So I often get asked, can an X wave actually overshoot? And the answer is yes. And I wanted to show you this example. X waves can definitely overshoot, because there are some Elliott Wave analysts who will tell you they can't. But actually, an X wave is simply like a B wave, a corrective move. Whether this is an ABC in the end or a WXY from a sentiment point of view, it doesn't really make a great difference. So of course they can overshoot. There's no rule in Elliott Wave that says that an X wave couldn't overshoot. It's just a corrective rally, just a connecting pattern. Yeah, it's a correction in a correction. That's what an X wave essentially is. And they occur, for example, in double zigzags or combination patterns. Now, there's always more than one scenario. Whether this really is a WXY is a completely different question, but I wanted to show you an example of an overshooting X wave because they're not so common. That being said, it might turn back into an ABC structure at some point, but we have three waves down, three waves up, and three waves down which just fit looking at the context, if the market tests this Fibonacci support area, because a low could form here. This could be 1, 2, 3, 4, 5. Then we have an A, B, C structure. But in that case, this move down would be very extended, which makes me think this was rather a WXY from a short-term bearish point of view. Short-term bullish, we might take the direct path higher in a diagonal, but that's not really what it's about. Just want to show you here the concept of a WXY, but it's important to be aware of alternative scenarios. Whenever we're dealing with structures that are not very common, like a WXY anyway is not that common. And then when we're dealing with even an overshooting X wave, which is even less common, and I'm not saying this is the only interpretation here, but we just have to be very open to alternative interpretations as well. So we're currently here in a range, and important when we're dealing with a structure like that, it's important to understand the invalidation point. So any break above that X wave high would of course invalidate this scenario, yeah, because then this move up is too high. So yeah, overall just range bound movement here on the smaller time frame, and that should clarify you know, how such a complex correction can unfold also for quite a long time in this range. Now let's take a look at the Ethereum Bitcoin chart. This is helpful because Bitcoin is kind of leading the way at the moment. Now, the Ethereum Bitcoin chart, in this entire cycle, Ethereum Bitcoin has been in a downtrend. It's actually been in a downtrend from the 2017 high. So there is currently no clear evidence of a substantial low here. The move down can easily be classed as a C wave. 1, 2, 3, 4, 5. So we might just see now a corrective bounce in an overall downtrend. However, if we get a break above the 0.039 level, that might be a first indication that actually really the bulls are trying to take the lead. The Ethereum bulls compared to Bitcoin. If this is in a downtrend, Bitcoin is leading. Now, something interesting happened in April. Ethereum is trying to take the lead. So are we actually starting to lead? Well, at the moment, this is a 3-wave move up. If we get 5 waves, as shown here in yellow, and we reach this blue zone, then there's a case to be made that Ethereum bulls are trying to take the lead. This area is between 0.027 and 0.03, and that we can then watch for a corrective pullback, which I've labeled here already as wave B. Yeah, it's just a more clearly bullish chart if we get 5 waves up. With only 3 waves up, probabilities are quite balanced, but it doesn't look like there is a substantial top already in. So I'm definitely watching if the market can generate a 5-wave move up. So there's a small trading area here that I communicated in our membership. But it's more important to understand if we get 5 waves up, that's at least a statement that Ethereum tries to outperform Bitcoin. And I think there's a good chance this actually happens. After 5 waves up, we're going to watch for a B wave pullback. There will be a support area, it's already on the chart, but it will have to be moved with the price as we still go higher. Now, this could only be temporary in an A, B, C structure. So as I said, we need 5 waves above resistance to suggest that even something more substantial bullish or substantially bullish is unfolding. But still important short term. For now, therefore, there seems to be a short-term uptrend, ETH versus BTC, and that means Ethereum is likely outperforming Bitcoin in the short term. Pay close attention to when here a top forms, then this will reverse again, but then there will be a support area and there could be another area or period of Ethereum outperforming Bitcoin. So at the moment, I think I'm leaning towards the development of potentially 5 waves. It's going to be interesting. And then that next pullback could be an opportunity and there could be another rally. But as long as we are overall below resistance, it's not really a decisive breakout overall. So it should give you a good idea of Ethereum and how it relates to Bitcoin, but also overall the Ethereum chart. I hope you liked the update. If you did, please hit the like button. Leave a comment and subscribe. Make sure that you check out our crypto membership if you're interested in daily updates on Ethereum, Bitcoin, many other crypto charts. Over 100 TradingView live charts are accessible there. There are regular live streams and much more. Check it out. Link is in the description. Thanks so much. Bye-bye.